In this challenging investment environment, are all your concerns being addressed? The unfortunate reality is that most of us are ill-equipped to understand how to implement and adhere to long-term strategies on our own. Because finding that balance can be so challenging, enlisting experienced and talented professionals to help navigate towards financial independence has become essential.
It's very important to use a professional when you're designing your investment portfolio. Someone who's not conflicted. I like to call it sitting on the same side of the table as you. And I kind of liken it to going to a doctor. Let's say I have a headache. Well, I'll go to the doctor, my doctor's able to diagnose my problems. It might be a headache, it might be something else, and then he'll point me in the direction of going to this specialist or that specialist. That's the way you should handle your investments. Find someone who can help you with the overall picture, with your asset allocation, and then allow them to point you in the right direction and interview and meet the people who are going to be doing the actual investing for you.
A fixed income manager that analyzes each client's tax and liquidity situation individually, Bill focuses on identifying the securities that offer the highest after-tax yield with the lowest risk and volatility. One vehicle Bill's seen great results with that many investors struggle to understand: municipal bonds.
There are many opportunities in the market, mainly generated by the fact that there's not a lot of research. Individuals buying bonds still dominates the market. First of all, I think you want to know, is this an appropriate investment for me? Am I looking for safety of principal? Am I looking for income? Once you make that decision, how do I decide who to work with? Should I work through a broker? Am I sophisticated enough? Should I go to a money manager? Should I use a mutual fund? Those are all important questions to ask when you're choosing to invest in fixed income.
Based in San Diego and Chicago, Gurtin Fixed Income Management is an SEC-registered investment advisor, working with individuals and investment advisory firms nationwide to build fixed income-related financial solutions that meet their clients' unique needs. Gurtin Fixed Income's overriding investment philosophy is that fixed income should represent the foundation of one's overall investment portfolio and will never sacrifice credit quality to achieve higher returns.
We aim to be a best-in-class fixed income manager specifically for municipal bonds. It's based upon integrity, it's based upon transparency, but at the same time, we want to make sure that we are getting the best risk-adjusted returns for clients. So let's compare what we do versus the wirehouse brokers. And first of all, I want to say there are many fine brokerage firms out there. There are many fine brokers. But understand that there are two things that are different. Number one is brokers tend to be conflicted. They are not really independent. They work for a firm and they sell their products. The second thing is that when you are buying bonds, especially through a brokerage firm, there are hidden fees called markups. You don't see these fees, you really don't know what they are, but they are there, and you really have to dig to find them. If you buy a bond and hold it at a brokerage firm, they're not doing independent research on every bond you own, and they're not monitoring that bond in general. They're using the ratings agency's ratings, and it's very difficult for a brokerage firm to actually do independent research because it's difficult to say something negative and then to underwrite bonds for them. We do our own independent research. We don't count on ratings agencies. We're not counting on anybody else to understand the underlying credit quality of a municipality. And there are 80,000 different issuers out there.
With over 150 years of combined fixed income investment experience, Gurtin Fixed Income can offer clients a transparent view from a return, credit, and cost perspective into the often opaque world of municipal investments to unlock the mystery of municipal bond investing.
I think there are really two things to consider when you're investing in municipal bonds: credit quality and duration. You want the highest credit quality. This vehicle is for safety of principal. The second thing is duration. A little more complex to understand, but I'll make it simple. If interest rates are low, which they are today, and I buy a one-year bond, I'll get a low rate, but it'll mature in a year, and if interest rates can go up, I can reinvest the full amount. If I buy a 10-year bond and interest rates are low, and next year they go up by quite a bit, I am now locked in for 10 years at a very low rate.
The nature of investing involves some degree of risk, and when building a sophisticated municipal bond portfolio, it is imperative to be organized and efficient, not risky.
There are two old adages which I like a lot. The first is, those who cannot remember the past are destined to repeat it. People made a lot of mistakes during the financial crisis in 2008, and I see them making the same mistakes today in fixed income, looking for yield, not understanding what they own. The second thing is, insanity is doing the same thing over and over again and expecting a different result. Don't be insane about your investments. It's too important.
The municipal market is highly fragmented, but there is money to be made for an informed and wise investor. Whatever your goals, Gurtin Fixed Income will help you attain them. For more information, go to Gurtin.com or call the toll-free number on your screen.